Here we go. I'm sorry. Okay, we're on now. My mistake. Okay, so let me just start over. Here's what I wanted to show you. Any consecutive, any two retracements are going to give you a down channel. So this is not any kind of useful information. Here's what you want to find. Here's what you want to be able to track. There's no software that can do this because it really requires observation. It's this. Now, what you're getting is a series of lower highs and a series of lower lows right here. This isn't quite a lower low. It's a lower high, but you're trading it off of resistance, which is created by the upper channel line. So what you have is a multi-candle pullback, which is always a riskier kind of trade. But if you have the ability to track the channel here, you can see that you would have gotten a great trade. This is why it really, really pays to really scrutinize a single instrument so carefully. Now, I didn't see it. I didn't take the multi-candle. But if I would have seen what I was able to trace out right now for you, we would have gone short because we're trading off of, this is a strong area of upside resistance. And you can see it's the fourth candle. Here's one, here's two, here's three, here's the fourth. It hits it, comes right back off of it, and you've got the entry. And all you're doing is hoping it's going to break the lower end of the channel, which it's very likely to do. If there's a question about this entry, you have it. Because again, it's trading in the channel and it's trading just below the channel low. So now remember, any two candles form the channel. Then after that, you want to look and see if the retracement and the continuation remain inside the channel. Now this does exactly the same thing as consolidation does, just in a more roundabout way. Because what it's doing is, it's still trapping traders in the counter trend direction. You've got this trader in the channel. Now these traders are below the channel, but you've got all these traders. The longer the channel goes, the more traders you trap in the wrong direction. So then when you run them over, the channel explodes down with more force. And every one of these trades out of this channel worked. Now, there's no channel here. You have no entry here. And these two candles form the channel. Then after that, you've got yourself a channel. And you can use it to try to help you trade anytime you get a retracement. The major help here is on the multi-candle. Now, this is still a little bit of a risky trade. It's not a dark cloud cover. The candle body is small. But if you're inclined to take it and the 50 is down, or the 50 is rolling, 50 may be yellow. And you can see that the 15 bends, but the channel gives you the entry. And remember, the only thing that you want to do is you never trade a counter trend channel. If you do that, you're going to find that a lot of those channels are going to fail because we were trading those counter trend channels at one point and we just lost a lot of them. Let's find another one. And remember, when you do them in retrospect, they always look great. But what we have right here, well, these are just more triple tops. You just can't trade that. I mean, here is a valid channel with the entry here. I mean, they're very, very difficult to spot, and they're not easy. And you can move actually this channel right to here, and you can see you get, this is still a lower high, this is a lower high, this is a lower high. So you do form a channel. I can't, you know, they're not all going to be perfect, but you're looking for a series of lower highs and lower lows, and you have them right here. And you can use it off of here, or you can use it off of here. Either way, you've developed an area of support and resistance. And all of these candles are forming lower lows. This one, lower high, lower high, lower high, lower high. Now you don't want to take this trade because you're trading into support. This trade is the one that broke support. It's a little tough, but it's the one where you have the opportunity to trade it. If you traded it here, you still made money. So these are what we're looking for. We're looking for channels into the trend that, in other words, in order to form an area of consolidation, you've got to have at least 4 candles in a row. By definition, that's how we define it. In order to create a channel, you've got to have 2 candles in a row with lower highs and lower lows, or higher highs and higher lows. That forms the channel. Then you want to see if you trade in it. Here's the channel. Forms right here. Now here's the entry you take off the channel, because you've already formed it with 2 candles giving you lower highs and lower lows. Then you want to see if you want to take this entry here. Remember, it's got to be an entry that comports to our system. It's got to be a pullback to resistance on a short. Do we want to take this trade? It's another multi-candle. And based on the channel, we do. And the channel continues. Here's another low, lower low, and another lower high. And we have another winner. Once we break the channel to the upside, the move is over. And they're hard to spot. And you can see right here we have, I mean, there's a lot of them when you start to look. Now this is at 9:55 this morning. I don't think this is today. This was yesterday. Now there's the channel right here. Now until the channel's formed, you have no entry. No entry here, unless this is a valid retracement into a falling market. And this is not. This just creates the channel. You have a lower high and a lower low. Then we need to get a valid entry. And you can see you could take this off the channel, and unfortunately here's a loser. You're not going to get every trade a winner. And this is a losing trade on a multi-candle retracement, which you would have taken short. So I don't want to mislead you into thinking that every trade's going to work. But would you have gone back into the market on the multi-candle? And really the answer is yes, because you really haven't broken the channel high, which is really here. And the channel low, it really all depends on where you want to form it. And it's really sort of arbitrary, but you can put it right here as well. I'm just trying to give you best fit I can. So you get a loser, but you get a reentry. The reentry is going to give you back some of your money. Now, remember that the rules that we have on the number of retracements in a trend still hold for a channel. So here's our uptrend. Here's our first candle to the downtrend. So here's our first continuation trade. Here's our second retracement. Here's our that's a loser. Here's our third. Now we're taking a fourth retracement. Here's a fifth retracement, and we wouldn't take that. So I know this is a little bit more obtuse and not as clearly defined as trading out of consolidation is, but it's every bit as valid. And the reason that you can't really, like we have software that defines an area of consolidation, is because they're contiguous. They're contiguous candles. These don't have to be contiguous candles. You really have to see these visually. Now there's no channel here, because here's the channel that's formed right here. And that forms the channel. This is just an entry. And that forms a channel. That's it. Here's a channel. And you move it out here. And the question is whether you take the entry here. And the answer would be yes. Now this is 2:58 in the morning, but you're actually going to get 5 ticks. That's your third lower low, lower high, and third lower low. Let's look at some long channels. This just forms the channel right here. Trading off the lower. So this is not really a channel that we use to trade. I have to find one. Right here. There's your entry. Now it should be an entry anyway, because it's a pullback. It's a break, and it's a pullback. But if there's any question, because the previous candle's a doji, and it's actually it's a hanging man, you're in, because you're trading it right off the upper resistance line on the channel, like that. Important thing is that you have two consecutive lower lows. Here's another lower low, and this is another lower low. So lower low, lower low, lower low, lower low, lower high, lower high, lower high, equal high, you're in. And you're trading out of a nice channel. It's not exactly, you know, you can't define it as neatly as you can with a straight line, but it is structurally, that is a great down channel to take this trade off of. You know, these are already, whoops, that's the one thing I don't want. Now the other thing, the other advantage you have when you trade a channel is, I remember this trade, and this trade was an oversold trade. I'm not doing this that accurately. This is 29 ticks, believe it or not. It's very, very oversold. Now remember how we'll take an oversold trade out of an area of consolidation? Well, we should also take an oversold trade out of a really well-defined channel, because a well-defined channel, I think, is just about as powerful as an area of consolidation. It shows a considerable amount of weakness in the market, that at every pivot, you're creating a lower high and a lower low. On a multi-candle, that doesn't necessarily have to be true. The pivot can create a higher high and a higher low. So the question is, would you take this trade? It's oversold, and in addition, it's 6 ticks off a resistance. Well, if you saw how well defined the channel was here, which I just couldn't do, because I think I'm spending too much time looking at too many things, that would have been a tradable entry, because we have something to trade it off of, and the resistance is the channel itself. And just the fact that we've got 3 consecutive lower highs and 3 consecutive lower lows, and we're staying within a fairly narrow channel right here, gives us this entry. And remember, here's the first retracement, and this is only the second retracement in the trend. So this is a strong pullback and strong continuation. If we just look at the modified 15 and we just look at distance off of resistance, it's not a trade we would take. But if we realize that we've got a tighter area of resistance, which is a channel that we can trade off of, then we can take the trade. So it's something that we have to pay a lot closer attention to, and it will give us successful trades. Now, nothing's going to get us this. And this was 3:30 in the morning. And God only knows why that happened. Well, let's go back from 20 days. And I want to show you some counter trend channels and why we don't take them. Let's go back. Okay, let me look for some counter trend channels here. See, this right here is a break, retest, and continuation trade that goes 4. And I think we took, I don't know if we took it, and then another pullback to resistance, and a move down. It is also a counter trend channel. But unfortunately, this wick took us out, not the candle body. So we're able to take the trade again. I don't know if this was today or yesterday. And I think actually we were done yesterday. This is 12:26 and 1300. I think this is too far in the afternoon. And now when I look at all the counter trend channels, they all work great. Let me I'm trying to find a nice long counter trend channel to show you. So when we traded these counter trend channels, I'll tell you, they caused so much trouble that you would take the trade and they would still break out of the top of the channel. I'm trying to find one. See, after the fact, this is not a channel. This just creates the channel, the fact that the trade was successful. See, look at this. Almost in stepwise fashion. Lower low, lower low, I'm sorry, lower high, lower, 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 lower. You finally get to the point where you've broken the 50 and you can take the short. And if that isn't a series of soldiers lining up in a row to signal you a short trade right after you break support of the 50, I don't know what is. That's a tremendous channel to trade. Now, the fact that the 15 is above the 50 is okay on a channel. We always can give a channel a little bit more room. And once we break the channel bottom, like we did here, and all we needed to do was cross that 50, we have ourselves a nice short trade. And it is not stretching it. And this is probably a 10-tick trade. On 4 contracts, it's a $250 trade. It's 12 ticks. It's a $250 entry. So it's a very, very nice entry out of a falling channel into the trend. And for the purposes here, we can define the overall trend or the higher time frame trend as simply defined by the slope of the 50, which shows the higher time frame momentum, instead of putting up multiple charts. I'm trying to find a counter trend that just doesn't make it, and this may be it. And here's one right here. Here's a nice downtrend. Your entry's here. It doesn't make it. Well, it just goes 5. And then it comes right back up against you. Here's another one. Go short here. It's probably just going to go 5. But you can see that they're difficult. This one just goes 6. And then it comes right back up against you. So these counter trend channels are very, very tough to trade. And believe me, this one went 5 and this one went 6. We traded a lot of them that went 3 and 4 and came right back up against us. That's why we don't trade the counter trend channels, because you'll see when we trade them in real time, they're going to blow up in our faces. All right, let's find it. Let me see if we can find another one here. Look what a nice channel this is. Let's see where it is here. It's really defined by this pivot, and this pivot, which gives you a short. And this pivot still, that's equal high, not quite a lower low, but you can trade it. It's coming off resistance of the higher channel right here. Let me see if there are any questions right now, because I know this is a little more difficult than trading out of consolidation. Hang on 1 second. Okay, I'm glad you can see it. So they're tougher, and you really have to watch them carefully. But we're just like 4 candles in a row, start consolidation, and you're looking for the 5th or 6th candle to break out of consolidation. It takes 2 pivots that create a higher high and a lower and a higher low to create an up channel like this. Actually, it's here, and it's here. You can see this just didn't make it. Now, again, they're not all going to work. And I think I might have taken this trade. This was yesterday's trade, where I took this trade, and that was a loser. Or it may have been today's trade. Let me see what day it is. Oh, this is 12/27, so it's way back. Here we are again. There's the channel right here. And there's the entry out of the channel right here. And up we go. It's the 3rd retracement out of the channel. As each pivot gives you a consecutive higher high, lower high, consecutive higher low and higher high. There's another one. If you took the trade right here, don't stop out. And down you go. Okay. Let's take a look at them on the E-mini. Let's wait till it resets. Okay. This is just a nice series of single candle retracements. I mean, the channel doesn't help you much, but it forms right here. And you've got the channel right here. But here's where the channel really helps you, right here. And would you normally take a short here? I wouldn't. But there's a potential short. The problem is you've got the support of the modified 15, so it becomes a pretty dangerous trade, and I don't know what the quants look like. The issue is, though, that you've broken the 50, you have weaker support here, and you're in a long down channel. And remember, the longer the channel moves, the more counter-trend traders you've got caught. And the reason we want to trade a channel into the trend is the channel is almost always going to break out in the direction of the trend. That's what we do with consolidation. We believe that consolidation is always going to break out in the direction of the trend. So the longer the channel, the more likely it's going to break out in the direction of the trend. Now, if you would have traded it here, that's a very risky place to take it with support of the 50, but you can see that the channel gives you the entry. It's not an accident that you get a down move here. And it's no accident that you get a down move here. I mean, this is the power of the bears. And what this really is, if you want to look at it this way, is this is just a falling triangle. Right here. And you get the breakout here as the triangle gets narrower and narrower and narrower, as the trend gets lower and lower and lower in the channel. You're breaking out of a falling triangle, which is really all it is. The issue is to spot it, and it's not always that easy. And if it's ill-defined, don't trade it. And here's another one. Just not so ill-defined. Now remember, we're looking at them after the fact. What we have to do is we have to characterize the channel and decide where we're going to trade it. And what we're going to do is we're not going to trade it into downside support or upside resistance, because I think that those are less successful. Oh, there was a trade today on crude out of a channel that was white-based consolidation. That's what it was. Right here is another one. Have a series. This just shows that the power of the bulls is increasing. You're getting lower lows and lower highs. Here you have two equal highs. This is on the E-mini. The break is likely to occur once the candle closes at least halfway. It's not quite halfway, but there's where you get your break out of the channel, right there. But it's hard to see the series of lower highs and how the bears are just controlling this move down, and the overall trend is to the downside. So you're just looking for a break, which is really out of falling consolidation. In consolidation, the power of the bulls and the bears are equal. In a falling channel, the power of the bears is just incrementally stronger than the power of the bulls. And every time you get counter-trend traders pushing this, trying to push this trade up, but the bears are stronger because they're giving you sequential lower highs and sequential lower lows. And the issue really, just like it's out of consolidation, is where do you take the short and plan the break out of the channel? And that's going to come when the entry candle clears support on a short trade. Now see here, there's no defined direction. We've got the 50 in one direction, the 15 in the other. So you can't even look at a channel to trade. And let's look at an. If the channel's ill-defined again, I wouldn't trade it. But what you're doing is you're looking at the channels created by, and we used to have a pivot indicator that created a pivot at every jag in the market, but it became really such a hassle that we just didn't, that we did away with it. Here's another one. Now this is a 5 range E-mini. Now you would never get this entry. Now it's in the middle of the night for one thing, but look at this. Now, in this kind of a down channel with this entry, you don't really have a great entry on the break and retracement because it's a yellow modified 15. If you need an additional incentive to take the trade, not only is it a dark cloud cover, but it's a trade out of a well-defined channel. 3 consecutive lower highs, 3 consecutive lower lows. You've broken resistance to the downside, and the trade's going to run. So watching the channels is important as watching consolidation. It's just a harder configuration to spot unless you're sitting and staring at the chart. And here's another one. Here's 1, 2, 3 higher lows and 3 higher highs. Now you've got yourself an entry, even without the channel. But you've formed a channel here. Now it's not that well defined, and you really have to look carefully. But you can see that these 3 lows are all high. These lows are all higher. And these highs are all higher. And boom. Look at the move. So you can see what a powerful configuration it is. The problem is spotting it. And it's just not that easy to spot. I'm going to see if I can get Sergio to build us a channel indicator. I'm going to talk to him about it. It's not going to get all channels, but I think it's going to get us some of these so that we can get them without having to break too much of a sweat. Because you really just have to sit. See, here's a counter trend channel. Here's a short channel. And I'll be darned if it doesn't work. But you're not going to short above the 50. But it breaks down. You just wouldn't have an opportunity to call it because it's always into support. But you can see how eventually 1, 2, 3, 4 lower highs and 1, 2, 3, 4 lower lows, or 3 equal lows eventually lead to a breakdown, because clearly market structure is telling you in this channel that the power of the bears is just getting stronger and stronger and stronger. And you're going to likely break down in the direction, in that direction. But this is a counter trend entry, so we don't want to take it. Thank you, Dave. It's recorded. And you will get a link to it, Dave. The only thing, this recording won't come out till tomorrow because I've been recording all day, and I don't want to attach the entire session to this recording because you'll go a little crazy because it's going to be like a 5-hour recording. So Sergio will snip it, and we'll just send out the. It's going to be a closed link. Only the people in the webinar or in the didactic are going to have access to it. It'll be on YouTube, but it'll be invisible. So we will send it out tomorrow. Let's just take a look at one more instrument. Let's take a look at bonds, since we're trading it, and look at the ZB and go to a 3 range. Now I'm going to sit with him today. We're doing so many things. But I want to see if we can create some defined parameters and see if we can't get an indicator that will give us some of the more obvious channels. Just like we have one that gives us the more obvious areas of consolidation, if we could get one that would give us obvious areas and create like the red line and the blue line, like we have with the consolidation, that would be really helpful. And you can look at it right here. I mean, bonds are hard to trade, but look at this. Now that's a tough trade to take because you're trading into support. But really what I want you to see is the power of this channel. Trading off the higher channel line. Now, this created the channel and the break. And you're trading right back into it. So the question is, here's the question. When you move back up, is the market going to roll back over again? It's already done it once, but it rolled over at a lower high and the entry was a lower low. Now it comes back and it's a lower low still, and it's a lower high. So the likelihood is, so you've definitely got a well-defined channel, and the break is going to occur to the downside. Here, you've got the same thing. And this is a winner, I think. This is one. Nope, it's just 2 ticks. It's not a winner. And like I said, I'm not going to ever say that every one of these is going to win. But the channels are good for trading when you don't have these perfectly defined retracements and the continuation trades. And here's another one. When you get the market continually rolling and rolling, if it's rolling on lower highs and lower lows, you're forming this channel. Now there's no entry here because you have no channel. But here on this entry, you have the channel. But you can see you have the problem of trading into support. But you can take the trade here because you're trading out of the channel. And this is still a channel break. And you can take this trade, but then you have the problem with support here. But again, just to see the power of the channel. And when you see consecutive rolls at the 50, if these consecutive rolls are occurring at lower highs with lower lows, that's when, and look how it works here, and it works here. So you have this tremendous channel here. Let me just let me take off all the writing on this chart. And I promise you, I promise this is information you will never see in a book. Now we could include this. It just doesn't fit in really perfectly because it's still a lower high. And here's a lower high, here's a lower high, and these are all consecutive lower lows. So you can anticipate a break of the channel here, a break of the channel here, and a break of the channel here. Because you've got an area of dual resistance. You have the 50 and you have the upper channel line. Here you have the 50 and the upper channel line. And to get a trade on bonds that runs this far on 4 contracts is a $600 or $700 trade. I mean, if you get one of these in a day, you're done. But we just don't have a system-generated entry to capture this because it's so difficult. And the problem is that these lower highs and lower lows can occur so, unlike, you know, again, unlike consolidation, where they line up like soldiers within, on an 8 range, a 12 tick, on a 5 range, an 8 tick, and on a 3 range, a 5 tick. Narrow range, these kind of trades can come just, you know, many, many, many candles apart. So it's very, very difficult for an indicator to create this kind of market structure entry. What we have to be doing is staring at the instrument, seeing that we have the channel with the creation of this move down, and then see that we have a potential here, we have a potential here, and we have a potential here, simply because we're rolling at a lower high and at a lower low, which is creating the channels for us. And if we ignore this entry and take this trade here, which is absolutely valid because we're still trading in the channel on a lower low and a lower high and a lower low, the problem is we're trading into support, but I just want you to see that it gives you some great entries. Now these two create it. So these are not channel entries. These two create the channel. And here's the channel entries here, 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 and here. And these are not multi-candle, these are multi-candle retracements, but these two candles up define a new downtrend. This is 2 green candles up, a new downtrend. A whole bunch of candles up, a new downtrend. So we're not taking multiple retracements in the same trend. Every one of these is a new downtrend. It's a refreshed downtrend, and we're just picking the roll at the area of the channel. We just have to find some. Now here's one that fails. Our anticipation would be a break right here. This is why we should not trade into support. I'm showing you a lot of channels that work, trading right through support, but this one doesn't work. And that's why we would never take a channel where we had to break support. But this is an entry. You have an equal low and a lower high. So this is your third entry into the trend on a down channel, but you're trading right into support. I want you to see that sometimes they're going to bounce off support, and we don't take a trade into support. And here's a trade right here. And this is a beautiful trade right here. Consecutive lower lows, 1, 2, 3, equal low. You could take the trade here, wouldn't have stopped you out, or you take the trade here, wouldn't have stopped you out, and it wouldn't have worked. It doesn't matter, because I'm not here to tell you every trade's going to win. Let me see how. I think that goes 2 ticks. Now 2 ticks is our first. It's only going to go 1, because we're not looking for a pullback. It only goes 1 tick. If you took it here, you have a winner. And believe me, I'm not going to represent ever that this is 2 ticks would at least hit your first target. And the first target would have rolled your stop to -1, either giving you the opportunity to get out or would have only cost you a tick. And a tick on ZB is a lot of money. So this was an unsuccessful channel into the trend. So I don't want you to think like this is, you know, foolproof, but it does give you great potential entries. That's all they are. And when the trend is ill-defined, you just don't even look. It's only when the trend is well-defined that you should really be looking. And always look in the direction of the trend. Now, I hope everybody got that. I mean, it's a lot. And look at this nice area consolidation here. What a beautiful entry out of consolidation. I mean, this is a tremendously lucrative trade. Now, obviously it's coming at a time we can't take it, but just the structural setup to give you a long. And I just want you to notice this. You're trading out of consolidation, but you're also trading a rising channel. And that's why it's called a rising triangle. Because you have an area of consolidation where there's very narrow-based movement. It's basically sideways. But within that sideways movement, you're getting consecutive higher highs and consecutive higher lows. And that's what makes this entry so powerful. Overall price movement sideways, but the power of the bulls is slowly getting stronger here. So that when you finally hit support on this rising triangle, consolidation, it's really a rising channel, out of consolidation, boom, up you go. Now, if we can catch these trades on crude and the E-mini better than we have been, we're going to get better winners. And when you have the multi-candle back and it's not trading in a channel, let it go. And when you have these retracements that, you know, that are just nebulous, and let me just take a look and see at the entries. As a closer, we'll take a look at the entries I took today. Now, this really was a rising channel. 3 higher highs in a row, 3 higher lows, actually 4. Higher high, higher high, higher high, higher low, higher low, higher low. I don't even look at it, but I guarantee you it's one of the reasons why it succeeded was because of that. So that's trade number 1. Now, this was just a trade out of consolidation. We don't really have much of a faller here, but we do. Right here. Lower low, lower low, lower low. Out. I didn't take that. I was a little concerned about taking that trade because the modified 15 was yellow and we were oversold. But you can see how it broke. Let's take a look at crude. So this was a trade out of consolidation. And it just wasn't the greatest entry because of the fact that the candle body was just not quite enough. It wasn't a bad trade, but there just wasn't enough bullish power here. And it just wasn't a great trade. And this was just a continuation trade. We don't need anything more than that. But it was too far off support. They were both tradable entries. I like the fact that I had the quant background bias, but these should have been taken with 2. And as Dave pointed out, trading before crude inventory can be a very big bear. Now, these are our reversal trades, and they work. 2 out of 3 worked. We just should have taken them with 2 contracts. We would have, again, it would have been the same thing. We would have traded pretty flat on it. But then, when we got this perfect trade here, and there's no channel here, it was just perfect retracement, move up, pull back, 50 and 50 green, and you'll notice order flow and momentum were both green. And you don't see that often. They don't correlate. Look how order flow here is red and orange, red and orange. And momentum is always long. Now in the counter trends, we don't expect to have the indicators with us. But you can see how they don't always correlate. And there's a lot of times a very big disparity. But when they both align on an entry like this, you're going to get a runner. And here we had the counter trend that went 14 ticks. We had order flow with us. And I saw that and I believed it was going to help. That's our perfect structural setup for a short. So we really didn't have any kind of channel setup here that we could have used to leverage further. And you see, if we traded on, we would have had to anticipate a break of that pivot. It's not a huge pivot to break. I think I might have done so, and this would have given us a winner. See, and here's what I think we have to be very, very careful of, and that's taking consolidation out of a falling channel. Right here. Here, we're getting consecutive lower highs and lower lows. The second one defines the channel. Now, it's still very, very narrow based, but what we have here is a falling triangle in an area of consolidation. So now the indicator is just not smart enough to see that we have a falling triangle in this area of consolidation. So this break of consolidation to the long side, just because it hits support, becomes a very, very risky entry, and we would not take it. The fact is, it never stopped out. It just has a big associated risk. It went to here, and then is breaking to the upside. But I think to take a falling triangle out of consolidation is tough. What saved the trade was the fact that it traded right down to support and didn't break it and came right through. And these are the things that are going to increase the probability of our wins. So I'm going to stop here. I hope that everybody can understand that. It's just not that simple. But we're going to have to watch closely. And if we can catch these rising and falling channels, even with inside consolidation, it's going to help us markedly. And look how volatile the E-mini is. It's going up and down and up and down. Look at this. Now, let's see where we are here. See, we can't take this as a falling channel. Here's the channel here. And any pullback into the channel would give us a short. We never got one. This creates the channel. This moved down and this moved down. And we just don't have anything here. It just rolled right through it and broke it to the upside. So we have nothing to trade here. And our anticipation is still for a move short because we have the 15 below the 50. So we don't have a trade on the E-mini. And the E-mini is certainly volatile. All right, so listen, so that's it for today. This is is more esoteric, but also extremely important to trade profitably. So we came way back. to eke out some profit today. And that's, I just think for me, that's the key to being a successful day trader. It's not to lose your cool and blow it when you have your first two losers and you took them with too many contracts. And even though my wristwatch was giving me emergency beeps that my heart rate was going off the scale. I mean, just to stay focused and not stick your neck out on a trade. And I'm telling you, the system will come through. It'll give us winners if the market allows it. And we got our winners. We got a $360 winner, even after we traded on those counter trend trades. We lost $10. We made $390 and lost $400. We wound up getting $360, and then we had two more winners, and we wound up having a positive day. And so we're just going to move forward. And I have to do a little bit better money management on the first two trades. And all counter trend trades need to be taken with two, even though we had two winners and a loser. And it wouldn't have mattered. We should take all the counter trend trades with two contracts. And we would have had a better day today. And I think, again, David's adage about taking trades before the crude inventory report are very well taken. They are very tough to take. Crude does not follow through. It's very sluggish, and I think we have to be very careful next Wednesday about taking a trade. And if we do take one, it's got to be perfect. It can't have a yellow 15. It can't be a trade out of consolidation unless it's coming right off support created by the modified 15. It's got to have 6 or 7 ticks of candle body. It's got to be that kind of perfect trade. We can't give a pre-inventory day trade any leeway whatsoever, and that'll make the day more profitable. And we won't have to come back and catch one. But we did. So listen, everyone, have a great afternoon. I hope you really profited from this. And you are so right. David just said that there's no smart money in the market prior to inventory report, and I think that, you know what, that's a great concept, and I really like it a lot. I think that he's completely correct. The institutional traders are all sitting on the sidelines, waiting for the report to come out, and then, you know, really pound the market down. And we saw what happened after the inventory report. Volume picked up, and then after that, it tailed off. But then we were holding up on closing because we were still getting 1,000 contracts a minute. The institutional guys were still pumping contracts. So look, I mean, we got 615,000 on crude, and we're through 1 million now on the E-mini. And 11:30, we just had anemic volume. So this is when the big boys come into the market, and these are the guys that we want to track and we want to follow. So I think that's a rule we're going to take between at 8:45 and 10:30. If it isn't an absolutely perfect setup with 2 contracts only, we're gonna stand aside on crude inventory day. So thank you, Dave. That's a nice rule. I swear you I'm going to adopt it. We're going to take 2 contract trades before the crude inventory report, and we're going to take them on perfect trades only. We're not going to give the market any leeway. And that's it for the afternoon. And I really appreciate Dave. So everyone have a really nice afternoon. We'll chop it up, put it up, and send you the link out the latest by tomorrow afternoon. So everyone have a really wonderful afternoon. Take care. See you back tomorrow. Bye-bye.